We're here to empower high-income earners to gain back control of your time through financial independence and stop trading your time for money and start letting your money work harder for you.
And hey, if you want to meet other high-income earners on their FIRE journey, join our High Income Earners FIRE Facebook group. Every month, we'll have guest speakers and we'll share about what our team is currently working on and allow you to share what you are working on with other high-income earners.
Hello, everyone. Welcome back to High Income Earners FIRE podcast. I'm your co-host, Cody Ye. On the next episode, a few episodes from now, Eileen is coming back. We already secure her. I know you guys all want the pretty face, not this face. But today, we have a very interesting guest coming on, and his name is Anthony Toth. Without butchering his introduction, he has been in the real estate game for more than 10 years. I know he looks really young. He has worked for asset management companies, private equity companies that has a portfolio of more than 300 million. And since 2.5 years ago, he started his own company, and now he already have 28 million under asset management. There's some retail, there's some mixed use, and there's 8 short-term rental and 2 more on the contract as well. And without further ado, let us welcome Anthony.
Thanks, Cody. Pleasure to be on here. And yes, don't let the baby face fool you. I know I look young.
So Anthony, before we start, how old are you?
I'm 34.
Okay. Cool. I'm 32. Like my listeners probably know that by now. So yeah, give us a quick rundown. I know we talk offline, but give us a quick rundown of how do you get to where you are and why?
Yeah, perfect. I got pretty lucky getting into the commercial real estate game, right out of college. I went to the University of Michigan, interviewed at the time was one of the leading property management companies in the country as far as assets under management, and really got a job that I had no business getting with no experience. Right? It was kind of they gave me a shot.
What do you study?
An asset
in college?
I studied baseball. I played baseball in college, and there was no way I was getting into the University of Michigan without being able to throw and hit a ball. But no, I graduated with a bachelor's in sport management, so a business type degree in some sorts. But no, I fell into this role. I learned the real estate game from the very ground level, which was property management. Yeah. Essentially, right? So I got to learn how each and every asset functioned on a day-to-day basis. But was punching that 9 to 5 clock, which really was like a 9 to 9 clock, right? I didn't have my wife and I weren't married, didn't have kids. Yeah. And that just kind of morphed into understanding, how the real estate game on a commercial level really functioned, and took that into the private equity world and really started gaining a hunger and a passion to investing and understanding how investing in real estate can end up creating that true generational wealth and that freedom that we all strive for. And when I was a partner in the private equity shop from 2015 to 2020, I kind of got a little bit of a taste of that financial freedom and not working that 9 to 5, because it was more of a lax type environment of just just get your what done. Mm-hmm. And the goal became to have a portfolio of my own, and have that financial freedom, invest in the real estate assets that I really wanted to, and build that trust with my investors. And so far, 2.5 years later, after forming Dynasty Investment Partners with my partner, things are going pretty well, and we're on a big growth and scale trend to really blow this thing up.
Mm-hmm. That's pretty interesting. Did you like the money you raised for your Dynasty, like your own venture of your business partner now, were there any people from your previous work that, because they trusted you, so that, I want to diversify a little bit, I'll throw you some money as well?
Yeah, there absolutely was some carryover from prior companies and that trust that was built up. But it wasn't just investors, right? It was other property managers and vendors and lending relationships And that's really how I determined I was ready to really do this on my own, is, be a partner under somebody else's umbrella and really starting to build those relationships and understanding of the business. I was able to take that and carry it with me to really start my own thing. So without a doubt, it's
Helped
just
a lot.
yeah, the dominoes fell where they fell, and it ended up just lining up perfectly.
Mm-hmm. Yeah, a lot of people who are younger, older than us, if you're in the stage where you're kind of like, Cody or Anthony, I don't really see where I'm going, but a lot of time when we're in it, we probably don't see it. But now that we
Yep.
look back, no one wants to get into property management. Hardest part, but the most important part, because
Yes.
everyone likes the sexy BRR, the big numbers. But if you can't manage a property, you can't really deliver that return. That's the
Right.
most important part, right?
Yeah.
A lot of people forget about the back end because it's not sexy, right? So you actually tackle the most important part and most difficult part and the most boring part. No one wants to stick it out. So,
Right.
yeah.
Yeah. I mean, it's we're in the short-term rental game. It's that base, those people at the very base of the property in your business in short-term rentals are your cleaners. And in our multifamily assets, it's who's on site every day. It's your property managers and it's your maintenance supervisors. And without those people, without having good people there, you're not going to be successful. There's just no way.
Mm-hmm. So we're going to talk about what you are the most specialized in, which is multifamily and short-term rental. So how do you compare these two? Because most of our listeners have small multifamily to big multifamily, like 20, 50, some of that has more than 100 units.
Yeah.
But a lot of them are interested into the short-term rental as well. They heard about the Airbnb arbitrage. I had like 10 short-term rental arbitrage gurus back on this podcast back to back. So how do you compare multifamily and short-term rental, and where do you think they each serve a purpose?
Yeah, so the biggest difference between multifamily and short-term rental is, you simply have a different duration of stay, right? The short-term rental is more of a customer service, hospitality-driven business where, you're communicating with customers who are booking 1 to 7 day stays, and it's more time consuming. You're running a glorified hotel, essentially, is what you're doing. Right.
Yeah.
And multifamily, the main reason why we got into short-term rentals from multifamily is started as a way to offset, the rising interest rate environment. Right. We couldn't make traditional multifamily deals where we're at in Detroit or in Florida when interest rates got to 6% and sellers were still demanding purchase prices at cap rates that were at or below interest rates. You can't get that math to work. So like I'm sitting right now in one of our short-term rental units in Detroit, nice. which if this unit was a long-term rental, it would do great. We could probably rent this out on a 12-month lease at between $200 and $2,200 a month. It would probably equate to somewhere in the mid single digit cash on cash returns. Or we run this as a short-term rental and this thing will produce $4,000 to $6,000 a month in peak season. And I can give investors a substantially higher cash on cash return as operating it as a short-term rental. So that's why we kind of took our syndication model from a more institutional multifamily type focus, morphed it into and did the same thing with short-term rentals. And really the biggest difference is on the operations side for us. It's no different for our investors, really wouldn't know a difference other than their distributions are a little heftier in our short-term rental portfolio.
Mm-hmm. So do you guys own all your short-term rental properties, or is it one of those arbitrage?
We own everything. We own everything ourselves. And, our arbitrage for those operators that are very successful with it is a great investment for producing cash flow, right? And that's why they do it. And with very little overhead, you can really leverage yourself well. and scale fast. Why we don't do arbitrage is we like to own our real estate. We like the tax sheltering benefits, and we like to be able to take depreciation. And as you know, you can't really do that if you don't own the real estate. And that's one of our main reasons for why we don't operate in the arbitrage space.
Yeah, that's a very key point. So the main goal, just to reiterate, is short-term rentals really because of the higher return. You will be able to offset if the interest rate stay at this level or even go higher, because multifamily, if you try to buy now, guess what? All the commercial people don't want to budge because they know they have a good asset. So the cap rate that they're selling at still low, but if you enter at that low, you're like, we can't make it work, right? So
exactly,
the seller and buyer just can't come to an agreement yet, right?
No.
Do you think
and I think
that might change, or?
I do. I think it might change. So I think we've already started to see seller expectations come back in line at a more healthy level on the single family residential sellers market and in the commercial market as well, depending on the asset class. I think we're going to see a lot of opportunities in your traditional long-term rental multifamily. There's a lot of buyers that acquired property when interest rates were really low with 12 and 24 month bridge loans, and now those are coming up and they're due. And I think I know for a fact that there's a lot of owners here in Detroit that maybe haven't been doing it a long time, didn't understand the interest rate environment, and now they have to refi at 6, 7, maybe 8% by the end of the year. And they sure as heck didn't underwrite that. And I think there's going to be a lot of situations with those buyers that bridged into purchases at very low cap rates that are going to have to sell because they have no other choice. So I think there's going to be a lot of opportunities for us to focus again in the long-term multifamily assets. But we just love the short-term rentals because of the cash flow, and it's still very early on in the sophistication of investing in short-term rentals. I think, to use a baseball reference, we're probably in the second or third inning, and a lot of large lenders and investors still look at it kind of as your redheaded stepchild asset classes.
Ooh, no.
And that's right. Exactly. Right. And that's not going to be the case here pretty soon. I mean, it is a legitimate, sophisticated, starting to get regulated, which is a good thing. Asset class that I just think that there's a lot of runway left.
So since we're talking about short-term rental, I know you're passionate about that. You're talking about multifamily just like everyone else. That Cody come back and talk to me in 20 years.
Right. Hopefully it's not that long.
It's not that sexy.
Right.
Now we do have other guests who come on and are locking in Airbnb arbitrage for multifamily. That's, for example, 200 unit, they lock in 20 units in the short-term rental route. I have those guests as well. But for you specialize in, I wouldn't call it high-end, but definitely a high-end price, right? For people who talk about short-term rental, my entering $200K, $400K, whatever. But you're talking about the price point of 1.5 to 2.5 million, right? So tell us about the 8 properties you have that doing that short-term rental, and tell us some.
Sure.
But tell us some horror stories when you first started, and what do you learn? How's that?
Stories.
People love those. I know you have a lot of experience, but people just love those. People love to see other people burn. I don't know why, but you get a lot of attention for that.
There's definitely plenty of horror stories. The toughest part about dealing with short-term rentals is obviously you have a lot more guests, right? You don't have someone that has a 12-month lease and you're dealing with the same person for a year or more. You have people moving in on a nightly basis. Not everything goes perfectly all the time. It's not all sunshine and rainbows. So you do have guests that, we have air conditioning units break and, guests get really upset, and understandably so, but we try to fix it within a 24-hour period and are cordial and understanding. you give folks gift cards to local restaurants, and you want their customer experience to be as good as possible, right? And you want to keep these people as happy even when things don't go as planned, because your business is built on reviews. And if you don't get a good review, it's going to affect all future bookings and where you're showing up on Airbnb. So it's crucial. So there's plenty of horror stories about.
So is AC breakdown the worst? That to me is like, what?
Is AC breakdown the worst? So far, AC breakdown the worst. So far, yes. I mean, we've had guests that there's different experience in one of our homes, which is our highest entry point home in Seacrest Beach, Florida, which is on the Panhandle. It's a $2.2 million home. We recently had a family stay there that showed up 5 hours before check-in, banging on the doors, trying to put the key code in the door before the people before them even moved out. Which was a pain. And then that same family, our cleaners got in after they left. Their kids shoved, roll of quarters down the sink and macaroni and cheese down the clogged 2 sinks in the bathroom. So there's like stuff like that happens, right? It happens.
That's solvable.
It's solvable. We haven't, knock on wood, we haven't gotten into any situations yet where we look at each other and say, what do we do here? We haven't broached those type of situations yet, which is good.
Got it. So your 8 short-term rental, do you mind sharing some of the numbers on how they run, how much you buy for, how much rent you're getting, and what's the overall really profit margin on that, right?
Yeah, absolutely. So the first 6 short-term rental units that we bought, one of which I'm sitting in now, we purchased in June of last year for $1.27 million, and this is a 6-unit apartment building in an area called Brush Park, the historic Brush Park, Detroit, which is one of the quickest growing areas of Detroit. Very high end, young professionals.
So like the up and coming hip area kind of thing.
The up and coming hip area. Big walk to all the arenas. It's on, but there's a ton of construction going on. So we got in at an entry point where we believe, and there's comps to support it, that the price that we paid for the building at $1.27 million, the dirt that it sits on is worth that, because there's quarter acres of land in Brush Park that are trading for very similar numbers. So
wow, you bought the building for free.
Pretty much. So in all 6 of these are run as short-term rentals. This isn't super high end, but it is very it's, and you can kind of see it's very well done, very eclectic, very historic Detroit.
So 6 we bought this unit. How many bedroom per unit?
So all of these are 1-bedroom units. The 2 units on the first floor are 1 large bedroom with a kind of a study. Detroit has a lot of business travel. Well, we're hoping more of that comes back as companies move back into the office. So we use the den or study area to really give the traveling business worker a place with a desk to sit and work if they're coming in town for longer stays, for meetings with other companies that are down here in Detroit. So we try to cater to not only the business traveler during the week, but we're full almost every weekend because of all the events that are going on in Detroit.
So you bought this for 1.27. It says the unit we talk about, each 1-bedroom unit, how much are they renting out for long term? Market rent.
Yeah. So I would say the average is about $220 a night, all in. Now
short term.
Short term.
Wow.
Short term.
Pretty good.
Now it is, and it's all over the place. So we're heading into very high demand season once the weather starts to turn here. So we have events like Movement, the Movement Festival that's coming up, which is a huge electronic festival here in Detroit. We have units in here that are rented for $2,000 for 3 nights, right? To be at that. We have Beyonce and Taylor Swift and Drake coming into town. Those are $450, $500 a night. There's various football games. We have the NFL draft that's coming here next year. That'll be a plus $500 a night event. So the summer really picks up. We crush it during the summer the summer months from Memorial Day to Labor Day, and then the off season. Really, January is probably our slowest month. So we'll reduce rates to really keep occupancy. But it's $220 a night is kind of the baseline for where we're at.
And then what's the occupancy rate with all the pricing strategy and all that? What would you say, like, overall, you guys been running it for 1 to 2 years, right? What's the kind of like the gross revenue look like if you compare long-term rental rate? How much can you rent it for long-term rental for 6 unit? Each unit is 1 bedroom. How much is that? Is it worth the effort, right? Share some of that.
Yeah. So quick answer, is it worth the effort? Absolutely. So we'll do in this unit, if we wanted to rent this out, any unit in this building, it's about $2,000 to $2,200 a month is what we could get on a 12-month lease.
Crazy. 1 bedroom, man. 1 bedroom in Detroit.
Yeah. For those listeners that, keep, and most of the country is like this still. It's Detroit is the old reputation of Detroit. It's like, don't go to Detroit, you're going to get, carjacked, blah, blah, blah. It's not that Detroit, and it hasn't been that Detroit for going on 10 years now. I mean, there's a reason Travel and Leisure and Forbes and USA Today have named Detroit a place to go visit in 2020, in 2023 and 2024. But so $2,000, $2,200 a month for a 12-month lease. And it's $4,000, $5,000, maybe $6,000 a month in those peak seasons during the summer. Mm-hmm. So you're talking, double, 2.5 times your money in rental revenue by running it as STR. So yeah, it's worth the added operation.
What about the low season where you guys be able to at least break even the long-term rental?
Yeah, we've been breaking even in the slow months, and just January was by far the slowest month, which I think most short-term rentals across the country have that same issue, right? Holidays are over. Yeah, everyone's back to work and back to school, so people aren't really going anywhere in January. So that was our slowest month.
Mm-hmm. And then overall, do you mind sharing some numbers? You bought it for 1.224. Let's say, hey, you bought it for 2 years. First year stabilizing, second year, what was the number look like? All in all, you said about $45K per unit, right? So what does that look like?
So we're around. I'm gonna grab my phone to do some math here, if you don't mind.
Sorry, people who are driving, don't take our fault. Okay, we're gonna do the math for you. I'm just pushing Anthony for like some definite answer. I thought he has it because
we're about $45,000 a year per unit. So multiply by 6. So call it $250,000 a year in revenue from these 6 units. It's 75% higher than if we were to rent it as long term.
Yeah, that's crazy, and that's kind of balanced out the high and low season already. Wow.
Yeah, that's balancing out.
So who are managing these property? Are you?
Good question. My wife is. So we brought operations completely in-house for all of our short-term rentals. We built an arm of the company called Dynasty Stays, and it is our management company for all of our short-term rentals here in Detroit and in Florida. So my wife is our director of operations, handles all the day-to-day. And then my business partner, Riaz Sheriff, also oversees a lot of the operations from a marketing, occupancy, and revenue producing standpoint. So we're still very new to this. We're learning every single day. But our take is, we've gone. I know the property management world. I know how third party property management companies operate. There's some good ones. But in my experience, no one's going to take care of your real estate like you are. And that's proven to be true for us thus far.
Yeah, especially when you only have, I want to say only have 8, but when you have a smaller than 20, you can still kind of somehow manage yourself. But over 20, you got to start thinking about quality might go down a little bit. You want to maintain it, but just have that fine balance because it's just only 24 hours in the day. You're going to start Something's going to
Right.
break, right? What is the
Yeah.
most? Yeah, go for it.
I was just going to say, you have once you hit, ours is really, I think, is going to hover around 15 units. We're going to have a decision to make of scaling our property management arm, which that's where the route we're going to go, or start hiring third party. But you're right. There does become a time where we're going to have to scale and bring in more bodies and employees, and that's something that we're planning for on a daily basis.
Mm-hmm. Before we go into a fire round, what's the most difficult part for your dynasty company about short-term rental? Is it managing the customer's expectation, or is it the cleaners? How do you guys keep the cost down? What's the most difficult part for you?
Yeah, I think the most difficult part for us right now is that there are so many tools from a tech standpoint that are trying to make our job easier. It seems like there's new tech and new software platforms to help automate the operations of short-term rentals that are coming out every day. That there's this fine line that we're walking of, do we try to automate these processes, or do we keep that personable customer service experience alive? And I think that that's something that we talk about often. In our experience, we want to provide the best customer service possible to our guests, right? And I don't think that automating that process of customer engagement and customer communication can be replaced by someone that's not a human being that actually is involved with the company. So it's time consuming, but that's, it's tough. You want to create that free time and that freedom for yourself, but at the same time, you still want to provide that customer service to your guests. And it's kind of walking that fine line of how much time are we really spending on customer engagement.
Mm-hmm. So I know I promise we're going to get into the fire round.
Sure.
What was your worst or aha moment since you started 95 Shop? What was the aha moment like? Was there a day where you were like, you know what I mean? Like at the bottom, you're like, you know what? That was the moment. Like, do you have those moments?
I do. And you'll probably be able to speak to this too. In fact, I know you will be, is you're 32, I'm 34. We both got baby faces, right? We don't look like we have a ton of experience and that we know what we're doing. And for me, especially, 3-4 years ago, I was not confident in my knowledge and my experience and my abilities until I really started talking to higher level people about what it is that we do and talking more about the business. And as I'm sharing my knowledge with people, walking away from those conversations going like, oh my God, I kind of know what I'm talking about. Like I know what I'm doing. Maybe I'm not giving myself enough credit. And when, we can listen to podcasts, we can read books, we can work 9 to 5 under somebody else and take some, learn the business under somebody else's wing, which is great, but there's no replacement for actually jumping in and experiencing it yourself. And really, just totally immersing yourself in the business. And for me, when Riaz and I started Dynasty about 2 years ago, looking back at it, my biggest regret is not doing it sooner. Realizing that the experience that I had built up and the knowledge and the understanding of the business, I was probably ready to do this on my own 3 years prior to when we started. So
how's the experience having wife involved in your business? Because I'm having that conversation, not wife, but fiance, but as of right now, I don't think we can work together. But that's different. But how did you guys make it work?
Yeah, it's funny. So we're making a huge push on social media. We're pumping out videos, my business partner and I just did one this week about that. And it's when my wife came on board about a year ago, it was tough. It was the biggest difficult hurdle to get over, and we still deal with this, is turning it off, turning work off, right? right? It's very, very difficult. And, early on going to bed, trying to wind down, and it's like, oh, hey, I forgot to ask you about this. Did you know that? And it's like, hey, we gotta really separate this kind of, there's this work-life balance thing we're trying to obtain. And this isn't getting us there. So we've learned there's two big changes that have occurred. We've learned to communicate very, very well and go into a conversation and say, okay, we're having this, like, hey, my wife's named Nicole. Nicole, I got something to ask you. It's about work, right? Or, hey, can we talk about this? This is a husband-wife conversation. Just going into it seems silly, right? But just going into a conversation with each other, knowing that, okay, this is about work, or okay, this is husband and wife, real life related, has made a big difference.
I heard that from multiple people.
Changed.
Yeah.
Yes.
I'm making that distinguishment as well as we're speaking.
Yeah.
Yes.
Yep. And then the other piece was my business partner Riaz and Nicole work closest together on a day-to-day basis when it comes to the operations of the short-term rentals. So it's created a little bit of natural separation where every minute of every day, Nicole and I aren't bouncing ideas and work stuff off of each other all the time. There's that separation because she's dealing more closely with my business partner, dealing with the day-to-day short-term rental operations, as opposed to literally everything is my wife and I.
That's a very good advice. So for people who are listening, the most dangerous or most difficult, because I have multiple companies. That's a very good advice. So for people who are listening, the most dangerous or most difficult, because I have multiple companies as well. One of the companies, I have my brother as an operational manager, and this is kind of like a wife, not a wife, but a family member, right? So most of our other employees might be thinking, what if they split up? As in, I say something, my brother says something, who do we listen to, right? So
right.
I got to make sure that's in unity. And, sometimes you have to talk in private, just, hey, like, we have to hack this out. Otherwise, everyone's looking at us two heads, right?
Yes. And that we've dealt with those challenges, right? And there's been times where, because it's so easy living with my wife, for my wife to be like, hey, what do you think about doing this? Yeah. And for us just to make a decision and rock and roll and go with it. Well, Riaz doesn't live with us. So he's being left out of the loop on some decisions, and we've solved that problem, right? We've solved that problem. So we're all on the same page, but it's not for everybody. Don't get me wrong. It's not for everybody. And we're working on it and getting better, every day as we learn and grow.
Cool. So let's go into our fire round. First question for you. If you're a podcast host, who would you like to interview?
If I was a podcast host, I would like to interview Ryan Pineda.
Ryan was on our podcast.
Yes, he was. I feel like a lot of people would go to him.
What would you like to ask him about?
I would like to ask him more specifically about how he first started scaling his businesses, like very, very first big jump that he took of starting to hire employees and really blowing things out of the water. Because that's where we're at with our company, and something that we're struggling with as we get ready to scale.
Yeah, that's always the key point. Like one of our coaching side of business, we're like 6 to 8 people. There's a reason why I say 6 to 8 is always fluctuating. And Ryan Pineda's episode, just kind of plug in a little bit for people who are new. Ryan Pineda's episode is kind of like one of the early ones. Let me find it for you guys. Episode number 6, aired on June 14, 2022. And I was just listening to one of his podcasts this morning. He's talking about how he actually started his business. So, give that a listen. I think that might help you. How I run 10 businesses at the same time. I think that will help. That was just aired Monday, which is March 27, 2023. So that might help you with it. Cool. So what are some of the ways that you're currently giving back or thinking about giving back, planning on giving back?
Sure. So we're trying to add value as best we can. We're throwing out educational, a huge push on social media to just share our knowledge, add value to whether it be our audience, our target audience, which are investors, just trying to share our knowledge with people, or it's the information that we put out is beneficial to folks that are trying to get into the business and do what we do, just sharing our knowledge, adding value to people's lives without asking for anything in return.
Social media can add value, can create value for people for free, but at the same time, build yourself a good brand and trust. So
exactly,
it's like a win-win, right? And
yes.
like Alex Hormozi said, the new oil is attention, right? So that's social media. And it's still the early stage as well. If you know how to play the game and, of course, have a good enough business on the back end to support the cause, because social media is not cheap if you want to do it consistently, right?
Right.
I remember I was chatting with Ryan Pineda, and his social media team costs like multiple 5 figures every month.
I think he's at like 40 or 50 grand a month on this social media team. Yeah.
Everything is scripted and plot out. He just shows up, and so where can our audience find more about you?
Social media. My Instagram tag is at a Toth, TOTH 723. Dynasty Investment Partners on Instagram. Our Dynasty Stays Instagram pages. And then obviously our website, which is investdynasty.com. So I would say social number 1, obviously our website number 2.
Beauty. So go there to find Anthony, give him a follow. He's a great young dude and starting out and doing big things, and really excited for you. And thanks for coming on. Is there any last word of advice you want to let our audience know?
If you're on the fence as to whether or not to jump into this real estate investing game and doing it yourself, my advice is to just jump in and get it done. Start sooner rather than later. You're probably more ready than you're giving yourself credit for. And there's nothing that you can do to replace or make up for experience. So if you're thinking about investing in real estate yourself or building a real estate investment company, do it. Just do it.
There you have it. Thanks, Anthony, again for coming on. And
yes.
We'll probably have you back on a future episode.
Awesome. Thanks, Cody. This was fun. Love to do it again.
All the links mentioned in this episode are included in the show notes. And if you love this episode, please leave us a rating and review on Apple iTunes. The link is also included in the show notes. And we would really appreciate your help in spreading the word to more high income earners on how they too can maximize both their time and money.
Also, if you still haven't joined our High Income Earners Facebook group, you are missing out on High Income Earners community, where we help each other reach our own version of FIRE.